Despite recently making new all-time highs, I'm giving you 4 reasons why I would rather double my position in this stock at these prices than sell my entire position. In other words, I'm going to tell you my favorite buy and hold stock. What's going on, everybody? My name is Matthew. Welcome back to my channel, and today we are talking all things Facebook. Now, before you click away and say, oh,
of course, this is so boring, of course Facebook is a buy,
I'm giving you 4 reasons for my bullish case that I don't see covered a lot in other places. Give me the format. First, we'll talk about declining ad rates and whether or not they're a real concern for Facebook. Second, we'll talk about the key characteristic of Facebook stock that I think people must understand if they want to own this company for the long term. Third, their movement into e-commerce and their potential advantage over Amazon. Then fourth, their insanely juicy financials. And finally, fifth, the risky risks. A couple of risks involved with Facebook. We're diving right into it in part 1, declining ad rates. Is it really an issue? One big concern that I've heard surrounding Facebook stock is declining ad rates, because as small businesses and the economy shut down or stay slumped, there is less demand for Facebook ads. But this chart tells us the exact average revenue per user in each region. And whenever these stats say XYZ per user, that means it's only counting users on Facebook and Messenger, not including WhatsApp and Instagram. Now, there are 2 things that you need to know before we dive into this chart. First, Q4 is always a little bit higher because of seasonality and holiday shopping. Second, I am personally considering Q2 and Q3 of 2019 as normal ad rates, because obviously those were pre-Rona. Alright, now let's take a look at this chart. You can see that worldwide, ad rates did take a hit in Q1, but we have since recovered to $7.05, which is actually on par with Q2 of 2019, 1 year ago. To me, this is really encouraging. It means that things are normalizing for the ad business, or Facebook has at least found a way to offset ad revenue losses. In the US and Canada, excluding the holiday season of Q4, ad rates are actually the highest they've been in the past year. And I honestly wouldn't be surprised if that was driven by the finance and forex gurus who have insane secret trading strategies. I make $8,000 every day in the first 30 minutes of the morning. All you have to do is give me your Bitcoin address and $1,000 a week. That's weird. I don't know why YouTube just put an ad there. Anyways, in Asia Pacific, which is home to the majority of Facebook's monthly active users, the $2.99 average revenue per user in Q2 is almost equal to Q2 of 2019. Europe is actually up from Q2 of 2019, but the rest of the world is still struggling to recover. Now, that rest of the world statistic is actually not great, because the rest of the world accounts for 33% of Facebook's monthly active users. But not to fear, because Facebook still increased revenues by nearly $1 billion from Q1 of 2020 to Q2 of 2020, despite the rest of the world revenue per user decreasing. The point is, the bearish argument that Facebook will suffer due to lower ad rates, that just doesn't really hold water in my opinion. Did their growth slow down dramatically compared to what we would have expected prior to the Rona? Yes. I'll be the first to admit that Facebook is not showing the same revenue growth as before by any means. But I think if it weren't for this global situation, Facebook's revenue growth would be closer to 20% than 10% right now. And 10% is honestly still pretty impressive in my opinion for a company of Facebook's size in the situation we're in. So, if lower ad rates are your only bearish point for Facebook, I'm still buying. Now let's talk about part 2, the most important characteristic of Facebook stock that I think every Facebook shareholder must recognize. It would be resiliency. If we're being honest, it's extremely hard to leave a platform like Instagram, Facebook, or WhatsApp forever. In 2018, it was revealed that Cambridge Analytica had harvested millions of Facebook users' personal data without consent. This was a massive news story, and it sent shockwaves through Facebook's stock, causing it to drop over 40% over the course of several months. But in almost exactly 1 year, Facebook had all but recovered and left behind it a great buying opportunity. Let's talk about a more recent example of when something like this kind of happened and I bought more shares. Headlines everywhere were talking about how big brands are boycotting Facebook. The stock price dropped more than 10% in a matter of days. I made a video explaining why I was buying Facebook at this time. You can go watch that video right here. I talked about a few other stocks as well, but the point is, I didn't see how the companies that were boycotting Facebook could seriously impact their revenue. Since then, the stock is up over 35%. The point is, no matter what happens, no matter what scandal, yes, some people may leave the platform for a couple of weeks, maybe even a couple of months. But eventually, this is social media. They will feel the pressure of losing connection with the family and friends who continue to use the platform anyway. And on top of that, these scandals, these big news stories will only help point out Facebook's flaws so that they can improve them, improve their user agreements, improve their company usage of data, improve the stock overall, which is great for shareholders and users of the platform. I mean, guys, Facebook was involved in a scandal that led all the way to the presidential election. If you can survive that, well, in my opinion, you can survive pretty much anything else. Now let's talk about part 3, why you should smash that like button if you have found any value in this video so far. It would mean so much to me if you guys took a little bit of time out of your beautiful day to smash that like button down below, make it blue, gently touch it, firmly grasp it, whatever you guys want. Alright, the actual part 3, Facebook's move to e-commerce and their potential advantage over Amazon. Facebook has created Facebook shops and Instagram shops. It's a completely new way to shop on their Facebook and Instagram platforms. It includes live shopping capabilities where stores, creators, and influencers can have live streams with their products linked below. It even includes loyalty programs for shops. But here is the kicker. And when I say advantage, I don't mean this means that Facebook will completely destroy Amazon and their competition. I just mean that Facebook might have something that Amazon doesn't really have, or if they do, it's just not as good. Alright, so what am I talking about? What does Facebook have that Amazon cannot provide to the same extent? Discovery. You see, Amazon is great for buyers who already know what they're looking for or have a very good idea. You go in your browser, you open up Amazon, you type in what you're looking for, and more or less, you're going to find what you want. Well, that's great, but what if I didn't have to search for this Elon Musk life-size cutout? What if, as I was browsing Instagram, this cutout showed up on my feed because Facebook knows what I like and they know what I want to browse. Imagine the Instagram Explore page, except instead of different posts and videos, it is shops and products that you would want to explore. It'll be like regular online shopping, but you will never have to touch the search bar. See, the difference between Amazon and Facebook is that Facebook, although it's a little scary, has extremely relevant, personal, and intimate data about us, so they will find products and show them to us that we are bound to like. Okay, alright, let's move on. Nothing to see here. But seriously, I think Facebook and Instagram shops, specifically Instagram shops, will do really well, and I'm excited to see how it does as a growth driver. Alright, part 4, their juicy financials, more specifically their balance sheet. If you don't know by now, Facebook has that pristine balance sheet. They have $21 billion in cash and $37 billion in marketable securities, which essentially means they have over $58 billion in cash. In terms of liabilities, well, their total liabilities add up to about half of their cash on hand, meaning any long-term debts that they have could be paid off today if they really wanted to. Showing their balance sheet is really just a formality at this point. It's one of the best and strongest in the world. But now it is time for part 5, the risky risks. Well, the first one is antitrust. Yes, Facebook, along with all the other tech giants, are pretty much constantly at risk of some sort of antitrust action against the company. These companies are so large that it could be argued that they stifle the competitive nature of capitalism. But for several reasons, one of them that I'm about to show you, I don't think this risk will be realized anytime soon. Enjoy these couple of clips of the senators trying to question Mark Zuckerberg.
Well, how do you sustain a business model in which users don't pay for your service?
Senator, we run ads.
Is Twitter the same as what you do?
It overlaps with a portion
You
of
don't
what
think
we do.
you have a monopoly?
It certainly doesn't feel like that to me.
Now, of course, antitrust actions would involve much more than just the Senate, but I think this kind of gives you an idea of how hard it would be for the government to efficiently and effectively form an airtight case against Facebook. The second risk that I see is kind of good, but kind of bad, and it would be exhausting Facebook's total addressable market. On one hand, if they did do that, that would mean Facebook pretty much has world domination. But on the other hand, here are some of the risks. About 4.57 billion people actively use the internet as of July 2020. Facebook already has over 3.14 billion monthly active users amongst its family of platforms. Meaning, for those of you playing along at home, Facebook has about 1.43 billion people left who are on the internet but are not yet on a Facebook platform, at least not on a monthly basis. In other words, only another 1.43 billion people before Facebook kind of exhausts their pool of potential users. And let's be honest, by now, if you don't have Facebook or Instagram, the odds of you getting one anytime soon are a little bit lower than when Facebook was new. So yeah, that doesn't leave a lot of room for user growth. But that doesn't mean that their total addressable market is going to stop there. Yes, Facebook may eventually stagnate in terms of user growth, but in terms of revenue growth, I'm not so sure. I think they'll continue to innovate with things like Facebook Shops, maybe even Facebook Pay, Facebook advertising, different forms of that, Libra, Facebook gaming, all this other stuff that they're working on. And on top of that, as the world progresses, more and more people will have access to internet, meaning more and more people can join Facebook. And Facebook and Google are already working on building out internet infrastructure in underdeveloped countries. And there are more reasons why I like Facebook. If you want details on that, click this video right here. But for now, that's about it. Oh yeah, little announcement. So for those of you who don't know, or maybe you're new to the channel, I am still a college student, which means at the end of this month, I will be flying back onto campus. Now, obviously the transition from here to on campus will be very fluid and maybe a little hectic considering the global situation. What I'm trying to say is that while I'm in school and while I'm transitioning, I'll probably be posting maybe once a week and maybe twice a week instead of the usual 2 to 3 times a week like it is now. I'm incredibly grateful for the opportunity and the community that you guys have helped build here on YouTube, and that doesn't mean I'm going away, guys. I'm still going to be here posting as consistently as I can, but this is just a little heads up in case you see any inconsistencies or anything like that. This is why. So again, I do intend to still be here weekly, just maybe not as often every week, and I truly appreciate all of the support that you guys have shown me over these past 5 months. For all my patrons out there, I will still be very active in the Discord and of course the Patreon community, posting my stream of consciousness videos there. And if you're not already part of that community and you are considering joining, there's a link down below. It's the first link in the description. Only join if you think it is worth your time and value, but I think it's a really cool place where you can talk to other investors of all different backgrounds, experience levels, and you pretty much get videos about whatever I'm thinking throughout the day or the week or anything like that. So that's the announcement. Not really good news, not really bad news, but something I want to give you guys a heads up on. If you found any value in this video, and I hope you did, please make sure to hit that like button, subscribe, check out the quote of the day. You might just learn something. Make sure to follow me on Instagram for daily posts about my portfolio, stocks I'm watching, and all that good stuff. If you're still watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous.